All right, guys. One of the questions that I get a lot is, what is the difference between fixing and flipping and buying and holding, right? So a lot of people, they're like, Chris, should I fix and flip houses? Should I rent them? Should I be a landlord? What should I do? So one of the things I say is that you have to look at your personal situation. Fixing and flipping properties makes a lot more money immediately. However, it's very, very challenging sometimes, right? So there's a little bit more risk involved. When you fix and flip a property, you have to make sure that you fix it properly, that is going to pass inspections, that is going to be up to the taste of current buyers. There's a lot of different variables, right? When you're renovating a property and for rental, you do have to make it nice. However, it's a little bit lower of a standard, so it's a lot less expensive, right? So then one of the advantages that you get when you buy and hold properties over time is that you get the advantage of appreciation, right? So the same equity that you create when you buy and fix a house up to sell it when you're fixing and flipping, you still have that money in there when you buy and hold. However, you're just deferring that profit for a later date, right? So I know that kind of might have been a little bit of a mouthful, but basically what you're doing is you're just spreading out when you're going to make your profit. Now, the great thing about it is, let's use an example, right? Let's say you bought a property for 50,000, you put 25,000 in it, and now it's worth 100,000, right? So you could immediately sell it for a $25,000 profit, right? Or you could hold on to it, right? So let's say you hold on to it for 5 years. And let's say over those 5 years, each year it appreciates by, let's just say 5 or so percent, right? So now your property is going to be worth about 130-ish or so. I didn't do the exact math. I should have did the exact math, but it'll be around 125, 130, somewhere roughly in that range, right? So now and on top of that, right, this is another thing I didn't mention is that you've been paying on the mortgage for 5 years too. So what you owe on that $75,000 mortgage has also went down. So now instead of making that $25,000 profit, you're going to be making somewhere from $50,000 to $60,000 profit before taxes and realtor fees and all that, right? Plus, you've been renting it out for 5 years and you've been getting that rental income, right? So if you just do the math, it's a no-brainer. You make so much more money if you buy and hold properties, right? The key to it is this, right? Now, this is the secret. So I'm giving y'all some secret sauce. What you have to do is you have to make sure you do this one thing or you're going to mess up your entire profit. You have to make sure that when you buy and fix the property, you sell it before any major repairs come up, right? So you have to sell it before a roof goes out, before a big water heater or big electrical or big plumbing issue. Because if you have to do that, that's basically going to wipe out all the rental income that you've had over the years, right? So the best way to do it is buy the house, fix it up so nothing really, there's very little maintenance that needs to happen, right? Fix it up properly from a mechanical standpoint. And then rent it out for 5 years and sell it before anything breaks. And that's how you maximize your profit when it comes to buying and holding.